everyone, and welcome back to Pursuits International. Today we're delving into a crucial topic that affects countless individuals worldwide: loans and mortgage scams. These scams can wreak havoc on your financial well-being, and it's essential to be informed. So let's jump right in. Understanding loans and mortgages. Firstly, let's establish what loans and mortgages are and why they are integral to personal and business finance. Loans and mortgages are financial instruments that play a pivotal role in shaping our personal and business financial landscapes. Let's break down these terms to understand their significance more deeply. Loans. A loan is a sum of money borrowed from a lender with the expectation of repayment, typically with interest, over a specified period. Loans come in various forms, each designed to meet specific needs. Personal loans, for instance, offer flexibility for individual expenses like medical bills or debt consolidation. Business loans, on the other hand, fuel entrepreneurial ventures, covering everything from startup costs to operational expenses. Mortgages. A mortgage is a specific type of loan used to finance the purchase of real estate, most commonly homes. Unlike other loans, a mortgage is secured by the value of the property itself, serving as collateral. This allows individuals to achieve the dream of homeownership by spreading the cost over an extended period, usually 15 to 30 years. Significance in personal finance. In personal finance, loans provide the financial flexibility needed to navigate life's milestones. Whether it's funding education, purchasing a car, or dealing with unexpected expenses, loans empower individuals to achieve their goals without bearing the full financial burden up front. The ability to access credit can be a crucial lifeline during challenging times, providing a safety net for individuals and families. Significance in business finance. For businesses, loans are the lifeblood that sustains growth and innovation. Entrepreneurs often rely on loans to start or expand their ventures, invest in equipment, or bridge financial gaps during lean periods. Strategic use of loans can propel a business forward, enabling it to seize opportunities, hire talent, and invest in the infrastructure needed for success. Types of loans and mortgages. Now, there are various types, such as personal loans, home mortgages, and car loans, each tailored to specific needs and circumstances. Understanding these basics is crucial as we navigate the complex world of financial scams. Personal loans are versatile financial tools that individuals can use for various purposes. They are typically unsecured, meaning no collateral is required. Borrowers can use personal loans for debt consolidation, home improvements, medical, or other personal expenses. The interest rates on personal loans can vary based on factors such as credit score and financial history. Home mortgages are long-term loans used to finance the purchase of real estate. They are secured loans, where the property itself serves as collateral. Home mortgages come in different types, including fixed-rate mortgages. Car loans, also known as auto loans, are specifically designed to finance the purchase of a vehicle. Like home mortgages, car loans can be secured or unsecured, with the vehicle serving as collateral for secured loans. The loan terms, interest rates, and down payment requirements can vary based on factors such as the borrower's credit score, the type of vehicle, and the loan amount. Some lenders offer pre-approved car loans, simplifying the buying process for borrowers. Student loans are intended to help individuals cover the costs of higher education. These loans can come from government programs or private lenders. Federal student loans often have lower interest rates and more flexible repayment options compared to private student loans. Understanding the terms, interest rates, and repayment options is crucial for students and their families. Payday loans are short-term, high-interest loans intended to cover a borrower's expenses until their next payday. These loans are often associated with high fees and interest rates, making them a high-risk financial product. Borrowers should exercise caution when considering payday loans and explore alternative options to avoid falling into a cycle of debt. Home equity loans and HELOCs, home equity loans, and home equity lines of credit, HELOCs, allow homeowners to borrow against the equity in their homes. Home equity loans provide a lump sum of money with a fixed interest rate, while HELOCs offer a revolving line of credit with a variable interest rate. These loans can be used for home renovations, debt consolidation, or other significant expenses. However, it's crucial for homeowners to understand the potential risks, including the risk of foreclosure if they fail to repay the loan. Personal loans are versatile financial tools that individuals can use for various purposes. They are typically unsecured, meaning no collateral is required. Borrowers can use personal loans for debt consolidation, home improvements, medical expenses, or other personal expenses. The interest rates on personal loans can vary based on factors such as credit score and financial history. Home mortgages are long-term loans used to finance the purchase of real estate. They are secured loans, where the property itself serves as collateral. Home mortgages come in different types, including fixed-rate mortgages, where the interest rate remains constant throughout the loan term, and adjustable-rate mortgages, ARMs, where the interest rate may change over time. the terms and conditions of mortgages vary, making it crucial for borrowers to understand the terms and choose a mortgage that aligns with their financial goals. Common scams. Identity theft is a sinister practice that scammers employ to exploit unsuspecting individuals, and one of the most concerning aspects is its connection to loans and mortgages. Let's delve deeper into how scammers cunningly use stolen identities to apply for loans or mortgages in victims' names. Gathering personal information. Scammers start by gathering personal information through various means, such as phishing emails, data breaches, or even social media. They aim to accumulate enough data to convincingly impersonate the victim, creating false identities. Armed with the acquired information, scammers create false identities that closely mirror the victim's details. This includes personal information such as name, address, social security number, and financial history. Applying for loans or mortgages. Using these fabricated identities, scammers apply for loans or mortgages through legitimate financial institutions. They often target online applications, taking advantage of the digital age's convenience and speed. Exploiting weaknesses in the application process. Scammers exploit weaknesses in the application process, such as lenient verification procedures or loopholes in online systems. They may also leverage insider information obtained through other scams or data breaches to bolster their credibility. Fake lenders. Let's shine a spotlight on one of the most insidious elements of the loans and mortgage scam landscape. Fake lenders. These fraudulent entities are like chameleons, camouflaging themselves as legitimate financial institutions to prey on the unsuspecting. Today, we'll delve deeper into their deceptive tactics and explore how you can shield yourself from falling victim to their schemes. The camouflage fake lenders are masters of disguise. They create websites and marketing materials that mirror those of established and reputable lending institutions. The visual similarities can be uncanny, making it difficult for the untrained eye to distinguish the fake from the real. The mirage of approval, one of their primary tactics, is to offer swift and guaranteed approvals. They play on the urgency of individuals seeking financial assistance, promising quick solutions to their needs. This appeal to desperation is a red flag that should make you pause and investigate further. Extraction of fees once they've gained your trust. Fake lenders often demand upfront fees for various reasons: processing fees, administrative costs, or even insurance premiums. Legitimate lenders typically deduct such fees from the loan amount, and any request for upfront payments should raise immediate suspicion. Advanced fee scams. Advanced fee scams are a deceptive tactic used by fraudsters to exploit the financial vulnerability of individuals seeking loans or mortgages. In this scheme, scammers promise prospective borrowers access to loans with favorable terms or quick approvals. However, the catch lies in the upfront fee they demand for processing the loan application. Initial contact. Scammers often initiate contact through unsolicited emails, phone calls, or even fake online advertisements, promising easy access to loans with minimal requirements. Promises of favorable terms. To lure victims in, scammers make enticing promises, such as low interest rates, guaranteed approvals, or flexible repayment plans. These promises are designed to appeal to individuals in need of financial assistance. Upfront fee request. The critical element of the scam involves requesting an upfront fee for processing the loan application. Victims are informed that this fee covers administrative costs, credit checks, or other fabricated expenses. Unsolicited offers. Be cautious of unsolicited loan offers that arrive unexpectedly through emails, phone calls, or online ads. Legitimate lenders typically don't reach out in this manner. Too good to be true. If the loan offer seems too good to be true, it probably is. Scammers often dangle exceptionally favorable terms to entice victims. Upfront payments. Legitimate lenders typically deduct fees from the loan amount or include them in the repayment plan. Be skeptical of any request for upfront payments before the loan is approved and dispersed. Warning signs. Now, let's talk about one of the most common traps that scammers use to lure unsuspecting individuals. Offers that seem too good to be true. These are the honey traps of the financial world, promising benefits that are often too favorable to be genuine. Let's explore the red flags associated with these tempting offers. Extremely low interest rates. One of the first signs that an offer might be a scam is an unbelievably low interest rate. While everyone dreams of securing a loan or mortgage at the lowest possible rate, it's essential to be realistic. Legitimate lenders follow market trends, and their rates typically fall within a certain range. If an offer stands out as significantly lower than the industry standard, it's time to proceed with caution. Guaranteed approvals. Another enticing but dangerous promise is the guarantee of approval. Reputable lenders evaluate applicants based on various factors such as credit history, income, and debt-to-income ratio. No lender can guarantee approval without assessing these crucial factors. So, if you come across an offer that boldly claims guaranteed approval, it's a glaring red flag that should set off alarm bells. Lack of credit checks. Legitimate lenders conduct thorough credit checks as part of their assessment process. It helps them gauge the risk associated with lending to an individual. If an offer claims to provide loans or mortgages without any credit check, be wary. Scammers often use this promise to attract individuals who may have poor credit, creating a perfect storm for financial exploitation. Unsolicited offers. Be cautious of unsolicited loan or mortgage offers, especially if they arrive via email, phone calls, or messages out of the blue. Legitimate financial institutions typically do not approach individuals without prior inquiry. Scammers often use unsolicited offers to cast a wide net and capitalize on unsuspecting victims. Unsecured websites. Recognizing secure and legitimate online platforms for loan or mortgage applications is crucial to avoid falling victim to scams. Here are some key details on how to identify secure websites. 1. HTTPS encryption. Legitimate loan and mortgage websites use HTTPS, Hypertext Transfer Protocol Secure, to encrypt data transmitted between your browser and the website's server. Look for HTTPS in the website URL and ensure there is a padlock icon in the address bar. Verify the website's legitimacy. Confirm the legitimacy of the website by checking for contact information, including a physical address and a working phone number. Search for reviews or testimonials from other users to gauge the experiences of individuals who have used the platform. Professional design and functionality. Legitimate financial institutions invest in professional website design. Be wary of websites with poor graphics, spelling errors, or an unprofessional appearance. Functional websites that provide a seamless user experience are more likely to be legitimate. Check for a privacy policy. Legitimate websites have a privacy policy that outlines how they collect, use, and protect your personal information. Review this policy to ensure your data is handled securely. Pressure tactics. Let's delve deeper into the pressure tactics that scammers often employ to coerce individuals into making hasty decisions, urgency, and limited time offers. Scammers frequently create a sense of urgency by claiming that the opportunity is available for a limited time only. They might say things like, "This exclusive offer is valid for the next 24 hours only," pushing individuals to make impulsive decisions without adequate consideration. 2. Fear and threats. Some scammers resort to instilling fear by suggesting negative consequences if the individual doesn't act immediately. For instance, they might claim that failure to take advantage of the offer could result in legal action, loss of credit, or missed financial opportunities. This fear-driven approach pushes individuals to act hastily to avoid perceived consequences. Constant follow-ups and harassment. Scammers may employ persistent follow-ups and even harassment to wear down their targets. They might bombard individuals with phone calls, emails, or messages, creating an overwhelming environment that makes it difficult for the victim to think clearly. The continuous pressure can lead to impulsive decisions as a way to make the harassment stop. Protecting yourself. Research and due diligence are the cornerstones of responsible financial decision-making. When it comes to loans and mortgages, conducting thorough research is paramount to ensure that you're entering into agreements with reputable and trustworthy entities. Let's break down the key aspects of this crucial step. Understanding the terms and conditions before signing any financial agreement, it's imperative to carefully read and understand the terms and conditions. Please take the time to look over the fine print, paying close attention to interest rates, repayment terms, and any additional fees or charges. This step can save you from surprises down the road. Verify the lender's legitimacy. Verify the legitimacy of the lender or mortgage provider. Check for proper licensing, accreditation, and reviews from other borrowers. Legitimate financial institutions are transparent about their credentials, and any hesitation or lack of information should be a red flag. Online presence and security in the digital age. Many financial transactions occur online. Please make sure that the lender's website is secure by looking for HTTP in the URL and a padlock symbol in the address bar. A secure website protects your personal information from falling into the wrong hands. Verifying the legitimacy of lenders or mortgage providers is crucial in protecting oneself from scams. Here are some detailed tips on how to check legitimacy. License and registration. Legitimate lenders are required to be licensed and registered with the appropriate authorities. Check with state or national financial regulatory bodies to ensure the lender is authorized to operate. Physical address and contact information. Verify the lender's physical address and contact information. Legitimate businesses have a physical presence, and their contact details should be easily accessible. Be cautious if the only contact method is through a generic email or phone number. Online reviews and ratings. Look for online reviews and ratings from reputable sources. Check consumer feedback on platforms like the Better Business Bureau, Trustpilot, or other review websites. Consistently negative reviews or a lack of online presence may be red flags. Company website. Examine the lender's official website. Legitimate lenders invest in a professional online presence. Look for clear information about their services, terms and conditions, privacy policy, and contact details. Be cautious if the website appears hastily put together or lacks essential information. Government agencies and regulations. Government agencies and regulatory bodies in the world of loans and mortgages. Several regulatory bodies and government agencies play a crucial role in overseeing lending practices. These organizations are designed to protect consumers from fraudulent activities and ensure fair and ethical lending standards. Here are some key regulatory bodies to be aware of. Consumer Financial Protection Bureau, CFPB. The CFPB is a U.S. government agency responsible for consumer protection in the financial sector. It oversees and enforces laws that ensure fair treatment for consumers in financial transactions, including loans and mortgages. Federal Trade Commission, FTC. The FTC is a federal agency focused on preventing fraudulent and unfair business practices. It plays a vital role in protecting consumers by investigating and prosecuting individuals or organizations engaged in deceptive lending practices. Office of the Comptroller of the Currency, OCC. The OCC regulates and supervises national banks and federal savings associations. It ensures that these institutions operate safely and soundly, adhering to fair lending practices. Financial Conduct Authority, FCA. Operating in the United Kingdom, the FCA regulates financial firms to ensure they operate with integrity and provide fair services to consumers. It plays a key role in maintaining the stability of the financial system, not the greatest defense against loans and mortgage scams. Stay informed, stay vigilant, and protect your financial future. If you found this video helpful, please give it a thumbs up, share it with others, and subscribe for more insightful content. Signing off from Pursuits International. Until next time, take care and stay financially savvy.